Welcome to Stockology. In this video, we are going to discuss how you can make your own trade plan. I do believe that each trader or each investor is different. He or she has his own discomfort, comfort, own way of looking at the chart. So the trade plan cannot be the same for all. So, in this video, we are going to discuss how you can make your own trade plan that will suit your psyche and that will make your trading or investing process absolutely mechanical and easy. Firstly, the trade plan has three main components: the view, trade setup, and trade management. In this video, we are going to discuss how we can segregate all these three components. In the view, firstly, we must know what is the trend, and it is always beneficial if we trade in the direction of the market trend. Now, how you will form the market view? There are different ways. Firstly, you need to decide the time frame that you want to trade. That depends on person to person, depends on your lifestyle, your working style. So, investor, if anyone chooses to be only investor, his time frame will be higher, monthly, weekly, or even higher. If a trader wants to trade, then he can trade on the hourly time frame, daily time frame, or intraday trades can be carried out in the 15-minute or hourly time frame. Whatever time frame you are trading, you have to keep the higher time frame trend in mind. So monthly chart has to be in mind for intraday trader as well as the positional investors. You can use simple tools to identify trend. Simple tools like Dow theory, simply higher high, higher low, lower high, lower low to determine whether it is uptrend or downtrend. Simple trend lines can be useful, or some may be comfortable with the EMAs. So there are some short term EMAs or long term EMAs. You can use those EMAs to identify the trend. For example, 50 EMA or 100 EMA can be used. If the price action is trading above it, the trend is supposed to be bullish. If the price action is trading below it, the trend is supposed to be bearish. Or simply CPR, central pivot range concept, can also be used to identify trend, whether it is up or down. One can choose whatever he is comfortable with. Once the trend is clear, then you can plan your strategy. Now, there are basically three trends that we know: uptrend, downtrend, and the sideways or range bound. So, once you decide what is the current trend of the market, accordingly, you can plan your strategy. For example, equity investment, futures, option buying, or option selling. Coming to the second component of your trade plan, that is trade setup. Trade setup consists of entry criteria, your stop loss, and target. Now, again, you have to decide your trading time frame. I believe for the intraday player, one can choose 15-minute or hourly time frame. If a positional trader is there, then he can choose hourly, daily, or even weekly time frame. So you have to decide your time frame and find your entry criteria on that particular time frame. Entry criteria, stop loss, and target has to be ready beforehand. Primarily, the focus should be on the price action, and then few indicators can be used in company with it just to confirm the price action. As we all know that price action is prime and all the other indicators are derived from the price action, so it is little laggard. So you have to focus on the price action. We all have studied different indicators like MACD, stochastics, Bollinger Bands, volume. Then you have your RSI, ADX, CPR. But the question is, do we need to use all of these? Answer is no. Less is more. Keep it simple. Use those indicators that we understand very well and we are comfortable with. I would suggest not more than 3 indicators at a time. So you have to backtest, you have to observe the charts, and then find your own comfort with the observations that you note and select at least three, but not more than 3 indicators. But focus should be on the price action. So your trade setup will consist of price action, entry criteria, which will combine price and indicators. After that, you have to decide the stop loss. What will happen so that you will exit out of trade, that you have to keep it in mind. Stop loss can be two types. It is technical, like if the price action is not confirming in the favor of your trade, then you have to take the stop loss. Or money wise stop loss, percentage loss wise stop loss can be defined. You must know the target beforehand. It should not happen that you have entered and you have marked the stop loss but you don't know the target. Then the RR becomes questionable. RR is risk to reward ratio. So whenever you want to enter any trade or trade setup, should always have these three criteria: entry criteria, stop loss and target, and hence you will understand the risk to reward ratio. That is how you can keep your trade plan very simple. Last but the most important part of your trade plan is trade management. Trade manage consists of risk management and mind management, which is the most important part. What do I mean by risk management is that you have to decide the risk per trade prior to taking the trade. So one must be prepared while entering in a trade, that if I am taking this trade, if this much amount of profit I can expect, firstly I must know that how much loss I can occur in this particular trade if it goes wrong. So you have to decide the risk prior hand. Never deploy complete capital in one single trade. So suppose your capital is 1 lakh, then you are not supposed to trade entire 1 lakh at any given point of time. So you can choose percentage wise. So 30%, 40% you can take exposure, and rest 60,000 amount can be kept as a cushion. So never ever deploy complete capital. You have to decide the overall acceptable loss amount on your entire capital. So you have to make sure that your trade should not go beyond, trade loss should not go beyond that limit. You can always use hedging techniques so that your risk is minimized. Hedging techniques are available in different option strategies that you all very well know. So whatever hedging technique you are choosing, you have to study that properly and deploy it. Then trade only when the reward to risk ratio is favorable. The ideal risk to reward ratio is 1 is to 3. That means 1 risk and 3 reward. If the criteria, your entry setup is meeting that criteria, then only take the trade, otherwise don't take that trade. Once the risk is managed, then mind management. Just keep calm. You have to know that there are only two possibilities when I'm entering the trade. Either my stop loss will hit or my target will hit. So you have to be ready with the outcome of the trade, and you have to trade mechanically. And also have discipline to trade only when the chart prints your setup, and not your mind is saying that this will happen so I will enter the trade. Okay, so let the charts commit to you, and then only you will commit to the trade. Now, the final checklist to ask yourself before entering in the market, before entering in any trade, you have to ask yourself that what is the trend? Do I know the answer that what is the trend going on? If yes, then what is my view? If the trend is bullish, then obviously my view becomes bullish. But if the price action is supporting that, you have to ask yourself. Next, on your time frame, is my entry criteria is getting fulfilled? Suppose if my entry criteria is higher low, if I want to go for the long side of trend, is the higher low confirmed? Is price action is bullish? Is candle is bullish? Is other indicators which I have chosen are supporting my view? If everything answers yes, then only you have to go for the next question, that stop loss and targets are, if they are pre-decided. If I'm entering the trade, what is my stop loss? What should be the target? Are all the levels already marked? You have always seen whenever I share my charts, my levels are always marked, otherwise my analysis is not complete. So even while entering the trade, you have to be ready with your entry, stop loss, target, and other levels which needs to be marked. Lastly, you have to ask if the risk to reward ratio is in my favor. And finally, am I following money management rule? 30% of your entire capital or whatever money management rule you set for yourself, am I following that? If you get answer yes, if you have satisfactory answers to all these questions, then go ahead. It will take just 1 minute before entering the trade, but take a pause, take this final checklist to yourself, ask yourself this question. You can do one thing, you can take a print of this and put it on your trading desk so that you will not enter in a jiffy. You will have a pause, ask yourself, and answer is yes, then go ahead and punch the order. Finally, document all your trade. You have to maintain the trading journal that will help you in your trading journey. So you can make Excel or a simple pen and paper method. A diary you can enter. You can enter the date, time frame, entry criteria. If it is met, stop loss. What is my stop loss? What is the target? And what is the outcome of the raise or trade? How much profit you have made? What is the percentage? And finally, a comment section has to be there where you have to mention your own remark, whether you followed the rule or not. That will make you a disciplined trader. See, trading is a ever evolving process. With experience, trading becomes easy process with simple tools and without much clutter. What you have to do is you have to review your trade plan periodically to make needed changes. So, even if you ask me today, is my trade plan ready? Yes. But is it foolproof? It is ever evolving. Finally, trade your plan and not your emotions. You have to not get biased. You have to follow your own plan, own rules, and your own criterias. And please don't go by your emotions. Follow the plan and trade mechanically. I hope the video of recipe of your own trade plan was useful to you. Do write to me in the comments and make use of this weekend to uh, to write down your own trade plan with these criterias. Thank you.